Meeting is now streaming live. We are coming to you live. This is Swan Signal Live, the second edition with Giacomo Zucco, live from Italy. How's it going, Giacomo?
Not bad, not bad. Hi,
That's good to
everybody.
hear. We've got Parker Lewis. I assume you're somewhere in Austin, Parker?
Camped out, bunkered in Austin.
Yep.
Yeah.
Welcome, man. And Corey Clipston from Cali. How's it going, Corey?
Good to see you guys. Just under quarantine here in sunny LA.
What a time, guys. What a time. I'm glad that we got this group together. Giacomo particularly is kind of in the thick of it now. It looks like we are kind of Italy's giving us a bit of a preview of where we're headed in the next couple of weeks in the US. How are things on the ground there, man?
So from the health point of view, they are still pretty much the same. We don't have the numbers are not that high that do you actually know a lot of people affected. So we personally still don't know anybody, but that's because the statistics is still scary from a new strange thing point of view, but it's not really that impactful on a normal life. But everything else except the virus itself is actually crazy. Food is starting to be a problem a little bit because right now you get fined and potentially arrested if you don't have a justification to leave your home, and they're starting to track citizens with cell phone cells. So if you now go 300 meters outside, they know it from the cell phone and you get fined or something. And basically the point is that you are only allowed to go on the closest supermarket, where you have to stay in a line for about 2 hours, 3 hours, depending of, in order to get food or medicines or nothing else. So the situation with food is that basically this kind of restriction of supply is basically making the supply. I mean, price cannot sky rise because it's a controlled market. So the typical socialist bullshit. And so for us, it's still good because we were prepared. So we had food enough. Meat is going to become a problem soon for us because we are eating a lot of meat because we wanted to stay healthy for this situation. But it's running out, and this is Italy, so there's not a lot of meat in the shelf. And the one that there is basically finished just a few after midnight. Online delivery is still working, but it's like a challenge. My wife Mir, she has been up at night after midnight, change of update of websites in order to get one delivery at the end of April. So it's like it will eventually arrive, but it's not something you can use. We see now that the gas pump, they are closed, but nobody can drive, so that should be not a problem. But yeah, economic damage are incredible. I think that in a healthy economy, which is sustainable, this will be enough for a serious chain of side effects, probably bringing down a country for many years. Since we were not in a healthy economy, but in a debt-ridden country, already half socialist inside a fiat economy, which was already about to collapse independently, this will be worse. So yeah, but the silver lining is that we were nerds, so we were already used to stay home. So at least we are not that bored.
Yeah, thankful for remote work and thankful for the internet more than ever right now as we're quarantined, to be able to maintain some human connection, see some faces, familiar faces, and support each other virtually. So Parker, Giacomo brought up there, the potential economic impacts. I mean, really the guaranteed at this point economic impacts. We're seeing it play out right now. Can you give us an update on where the markets are, what the Fed the actions the Fed has been taking, and maybe even just kind of play out how this might affect the economy? Some paths we might take over the next couple of years.
Yeah. So I think one, if you hear noise in the background, I've got a 70-story. Despite coronavirus, they're still putting up a skyscraper next door to my apartment, and I'm on self quarantine here. Yeah, so I think just giving a summary of what's happened over the last week, which has been a pretty remarkable set of events. I guess Thursday, the Fed announced a $1.5 billion repo program. So really what that is geared towards, or $1.5 trillion, I'm sorry, three $500 billion facilities, I believe 2 3-month and 1 1-month, or 2 1-month and 1 3-month. So that happened on Thursday. And then over the course of Sunday, they decided to reduce the benchmark interest rate from a range of 1 to 1.25 to 0 to 1/4. So a full 100 basis point rate cut, along with a $700 billion quantitative easing program. And the distinction between a formal QE program and the Fed's temporary repo program is that the Fed will not only be buying longer duration bonds, but they'll actually be buying those bonds outright. So I think it's a split between, of the $700 billion, I think it's between $500 billion of treasuries and $200 billion of mortgage-backed securities. And in terms of my personal view, I think from 2009 to 2014, the Fed's entirety of their QE 1, 2, 3 was 3.6 trillion. My personal perspective is that when the dust settles here, that the aggregate injections that they have to put in this time exceed what they had to do to quote save. I don't think that they actually saved the market in 2008, 2009. I think that they created the setup for what's happening now. And I'm certainly recognizing of the fact that there do seem to be two kind of quote unquote out black swan events that have happened, whether it be kind of the almost entire economic shutdown that's been induced by coronavirus, but then also happening at the same time that both Saudi and Russia have signaled to the market that they are going to not cut production and actually increase production. That sent the energy markets into a tailspin. But what I think is missed, or I don't want to say missed, I'd say it's easy to forget that there was a market structure issue that existed before these other two events happened to occur. And I really view it may be extreme to say that it's a fooled by randomness situation, but I really think of it as if it weren't these two market events, being kind of the impact of coronavirus or the impact of what's happening in the oil markets, that there was a large setup for something very similar to happen, and if it wasn't this, it'd be something else. And that the Fed has responded, I think, as we would expect them to. I think the only thing that it can do is do what it did in 2008 and 2009. It can only set up for greater instability down the road. May they be able to kind of stabilize things for the here and now. I think that's there's a greater chance of that than not, but that it ultimately sets us up for a world of greater instability in the future, because what they're ultimately doing in trying to stabilize the market is create a condition where more credit can be created, and the problem actually is the debt laden and the instability created by the amount of system leverage. So their only way to fight the fire is to create a world in which more debt can be created and existing debt levels can be sustained. That does end badly, and it likely ends ultimately in instability of currency. So kind of, I don't necessarily have a picked out level in terms of where I think the equity markets bottom out, but I am very focused on the credit markets, so we could talk about kind of what I'm seeing in the credit markets, if that makes sense.
Yeah, let's definitely do that. I want to kick back to Giacomo real quick. Giacomo, what's happening in Italy with the central bank there? I assume it's something similar. They're following cues from the U.S. Federal Reserve.
No, actually, the point here is a little bit more complex because we don't have a working central bank anymore. Banca d'Italia still exists, but it just has like regulatory functions. The printing function are moved to the ECB, the European
Oh,
Central
right,
Bank,
of course.
and
Yeah.
the ECB will follow the Fed as it did many times. There is culturally the ECB has some kind of resistance to quantitative easing, hyperinflation, because most of the organization is basically managed by let's oversimplify Germans, and German culture about that is very strict because they remember hyperinflation pretty good. Probably the cultural thing in Germany is a little bit, the cultural standing in Germany is a little bit against hyperinflation and super interventism. There was the shift of Draghi, the Italian guy at the head of the BCE, and he was super activist. He said like, whatever it takes, I will print. Now there is Lagarde. Well, she's not German, obviously, but she's also pretty much conservative. So they will probably follow the United States, but slower and with a little bit more of caution. The Italian markets and basically prices of government debt collapsed a few days ago because Lagarde said that the function, she's publicly said, we are not here to feel spreads between German bonds and Italian bonds. So our function is not a function of stability, which is, I mean, literally true, but then politically not really true. So there is, I don't think there will be any difference at the end. The euro will be just the same. One main difference is that the US dollar, except for the ultimate fate of every fiat currency, which is hyperinflation, is actually fine and strong in itself, while the euro is not, because the European Union itself and the monetary union after Brexit, I mean, UK was not even in the euro, but Brexit and everything is basically creating a lot of stress on the Schengen. So the free trade and free movement agreement across borders was removed. So now the European Union idea is basically collapsing. So the European money is not that wealthy as well, and so probably they cannot force it even more by explicitly dragging the market as fast as in the US. But they will, like when the US did quantitative easings 1 and 2, European Bank, they said, we are not doing quantitative easing, but we are doing LTRO, which is basically a pseudo-sterilized quantitative easing. So they will do the same eventually.
Is there a concern about an existential threat to both the euro as a currency and to the union itself, like precipitated by these events?
I don't see it very, very discussed. Actually, everybody was freaking out after Brexit because of that. It's a little bit like the discussion we were having before. Already the system was ready for something like this, including the precipitation of the fragmentation of European Union. So it was already priced in a way, but this is just one of many possible triggers. So just like market collapse after the fiat bubble, centralization and later balkanization of Europe politically was already basically dreaded and feared by many analysts, even without this. Now I don't see anybody talking about that, because everybody's just freaking out about the virus. But
Yeah.
eventually the discussion will come for sure.
So Parker, what are you seeing in the credit markets here, and what does what you're seeing concern you? Hey, Parker, you're on mute.
Apologies, I was trying to save you from the hammering in the background.
No worries.
So there's two things that I look at. There's credit volatility, and particularly the volatility in the treasury market. Where kind of, I think last week the 10-year, or maybe even the week before, the 10-year collapsed below 50 basis points in the U.S. and essentially over the course of 18 months dropped from 250 to 300 basis points to 50 basis points. So thinking about like that is a highly volatile market. But then in the last 2 weeks, the 10-year Treasury is swinging sometimes 30-40 basis points in a day. And that sends ripple effects throughout the credit markets. And so the first piece is the credit volatility on the Treasury side. The second piece is credit spreads and the risk premiums that exist between, say, investment grade credit and treasuries, as well as high yield credit and treasuries. And I think that what we're starting to see and what we can easily see is the movement in the equity markets. We can see the actions that the Fed takes. When I look at the high yield, it's a market that I particularly look at because it's not an insignificant market, but it's a large funding market for kind of middle market to large cap equities. And when I look at that index, I look at it as a general index of kind of the health of the underlying economy, or at least to see where it's trending. And when I look at that index, and there's 1,000 bonds at least in the index that I look at, to give context, when I would look at this 2 years ago, when I was doing a lot of the research that I was doing on the Fed, nearly all of those bonds in that, there's 1,000 bonds in the index, and nearly every single one of them was at or close to par. I think it was between 80 or 90% were over par, and the ones that weren't were really very close to par. Just over the course of the last week, I keep tabs on it almost daily. Last week, those bonds, I think 650 of them were above par. Today, 74 of those bonds are above par. And you see just the steady day in, day out kind of deterioration in that market. And that, when we look at the equity markets and we can see the volatility, I think, what we haven't yet seen is the flow through and the credit events kind of that are directly correlated to the true underlying economic activity. And that we can't really know how bad and how long term kind of this event will ultimately be, until we actually see kind of the number of defaults, the actual impairment on the corporate side in terms of not only earnings, but then kind of the restructuring that needs to happen. So, I don't expect this to, I reserve judgment until we actually see the impact on the economic side flow through to the companies. And so, we're already seeing, I think people oftentimes look at the Dow and they look at the S&P, but the issue is credit. And we're starting to see the negative, and also one thing to keep in context, and this is one of the reasons why I think that, everything that impacts the world is so systemic, is that once the credit market starts to de-lever on a system-wide basis, it's very difficult to reverse that course. It essentially feeds on itself. Kind of the initial economic slowdown causes GDP growth to slow, but really GDP growth is driven by the expansion of the credit market. And because the credit market is, orders of magnitude larger than the base money supply. And so once that credit market starts to contract, then it has kind of pro-cyclical negative feedback loops on general economic activity, because so much funding is dependent on that credit. So it's kind of like once dominoes start to fall, it's very hard to stop them from falling further and faster. And that, I wouldn't expect things to normalize until kind of, at least on the corporate credit side, the full extent of that pain is realized, and then people start to come out on the other side of that in terms of restructuring credit. Because I can't, giving a sense, and there's there's broad macro themes, but then there's also idiosyncratic kind of sector themes, and giving a sense of, the transport industry, at least on the high yield credit side, is trading at 80 cents on the dollar in terms of kind of the bonds in that index. Energy is trading at 59 cents. Now, there's obviously always a range between, certain bonds in that index are now trading at 10 cents on the dollar. Others, still may be trading, at 90 or 80 cents. But when you look at what's happening individually and on the aggregate, it's just, the equity market can rebound 6-7% tomorrow. Once the credit impulse is broken, it's almost and nearly impossible to reverse that without going through a restructuring cycle, and that doesn't happen quickly. So it's almost like I view it as, the pin to the grenade has been pulled, and we haven't yet seen it explode.
Right. Yeah, ominous times. Giacomo, we've been talking about this as Bitcoiners, this situation for a long time. Bitcoin was born in the 2008, 2009 economic crisis. This is the first economic crisis that we've seen Bitcoin, sort of be alive and operate in. What do you think is going to happen with Bitcoin, during this crisis? Do you think it comes out the other side stronger? Do you think this is an opportunity for us as Bitcoiners to really carry the light forward on, why Bitcoin exists and why it's important?
So I think that first of all, I think that this crisis resemble much closer. I mean, as an entity, it's giant. It's comparable with 1929, probably not even 2008. But as a type, it resembles more closer the crisis of 2001, just after 9/11 terrorist attack, because that in that time the market collapsed a little bit. It was, I mean, a little bit much, and there was a lot of shock going around, but people overall, they didn't have a lot of awareness about the intrinsic frailty of the financial system, and of the problems created long term by moral hazard of banking bailout, printing money and stuff like that, manipulation of interest rates. While in 2008, there was no terrorist attack, no virus, nothing. So when everything collapsed, people started to freak out. Like, I mean, everything collapsed because it wasn't sustainable. And sure, there is a subprime mortgage problem, but it was created by Fannie Mae and Freddie Mac. It was created by this financial system and government intervention. I mean, not everybody understood government intervention as part of the problem. Many just said, "Oh, it's a free market, it's capitalism, the Jews or whatever." But most smart people understood that that was a crisis in the system itself. In this case, we have a short term in which not as much people as we could hope for are actually understanding the value proposition of Bitcoin better, because they are living this crisis as something again exogenous, like 9/11. There are terrorists, there is the virus. We need a government to protect us and to print money, because the government must to protect us from the terrorists. So we need the war on terror and regime changes in Iraq. And now we need war on virus and generalized lockdown and tracking people and stuff like that. So the reaction is paradoxically, one, people is selling us as a speculative asset and savings for cash, the most liquid cash possible, because they want to buy toilet paper, they want to buy random emergency stuff. So they want to consume goods, and they want to give up savings for consume goods. And Bitcoin is mostly a saving technology. So of course, it suffered that just as well as gold and every other asset. And also the general sentiment among people, including, very sadly, many Bitcoiners, is actually a new pandemics of fanatic statism. So, oh, please, government, please save me, lock me down, control me. I need you. I'm scared. So I need your heavenly force to save me from evil. So it is not actually the perfect storm for Bitcoin yet, in my opinion. The only thing that could be a counter argument for this, because if this argument is true, then we may see Bitcoin just faring relatively well compared to the rest, and then be rediscovered when the scare for the virus is past, however that happens. But eventually it will happen, either for immunization of the survivors or a vaccine or whatever, but it will happen. And when that happens, either people will discover Bitcoin. Well, people should actually discover Bitcoin and understand the intrinsic weakness of the financial system. But one thing that could be a counter argument to what I'm saying is the halvening. We have this kind of fiat supply shock in a positive sense, which is a negative sense, of course, at the same time of the Bitcoin supply shock in the negative, thus positive sense. And this is very strange game theory. This is like 5D chess, and so I have no idea.
I was just going to bring that up, actually, the halving and the narrative that will come out of the halving, just less than 60 days away, most likely at this point. So we'll be 2 more months into this crisis. I think we'll have a lot more information about how things are going to play out, and we'll have a narrative coming out on the financial news that Bitcoin is now roughly, the same inflation rate as gold, which I think will make it look, first it'll remind everybody that, hey, Bitcoin's still around, because it's going to make the rounds. And second, I mean, that number, I think, is one of those big round numbers that's not the price, but is a milestone for Bitcoin to reach. And everyone then will also learn that in 4 years, Bitcoin will be half the inflation rate of gold and become, the scarcest monetary good that we've seen. That's fascinating to me about how that's going to play out. I don't understand the game theory exactly either, but I think that narrative is obviously very positive for Bitcoin. So I think it'll probably be good. Corey, you want to chime in? What's your take on what's going on here, man? You've got a lot of experience in corporate America. You got a lot of strong network around. What are you hearing about what's going on?
Yeah, well, you guys have covered a lot of the general stuff. I'm kind of interested to see what happens with global housing, and to see if, we've often talked about this massive store of value and how people have essentially been using housing, particularly in the US, but really around the world, using housing as a place to store wealth. And I'm very curious to see if this is the cycle where people start to not think of their house as much of a store of value, when it's just a place that they live, and not to expect that asset will always increase. Because, fool me once, shame on you, fool me twice. So this, I think, will be the second time that people's houses that they were kind of counting on as a piggy bank, or maybe they're, way over leveraged now, having essentially taken out a ton of equity, from their house. To ground this in reality a little bit, I live now for a year after leaving Santa Monica with the second kid. We moved out to Calabasas. At the end of my street is a giant building that was originally constructed by Lockheed Martin way back in the day, and then eventually got taken over by a company rather famous for playing a central part in the subprime crisis. So it was the Countrywide national headquarters, was right down the street from me. And it's this massive building, like a fortress, and it's just empty. Still, all these years later, there's like a co-working space in one corner of it that takes up about 10% of the square footage, and it'll just never be filled. And, I wasn't in this community 12 years ago, when that went down, but I can only imagine the number of executives, the number of real estate agents, the number of people that, bear those scars. And then you also kind of like, you look around. I've never lived in suburbia. I grew up in, semi-urban North Seattle, and then spent all my life basically in New York and Chicago before coming to LA. And I didn't really, you couldn't visualize how much people actually live by taking out the equity in their homes. So, as you get kind of plugged into a, let's call it suburban community, and, Calabasas is definitely not a normal place, but you can really sniff out that people have like fairly normal jobs that aren't necessarily all that high paying, but they bought a house like 20 years ago, and they've got sweet cars, but can never leave the house. And, they probably don't own very much of their house. Like, it's pretty patently obvious that a lot of these people are just kind of living and spending the equity in their homes.
Yeah.
Refinancing over and over again as the rates go down. And so I think that's kind of fascinating. So that's kind of point one. And then I guess the second one, just kind of looking at Bitcoin with regards to the market. I mean, we've all noticed the massive correlation between, the S&P and Bitcoin over the last week and a half, and, even longer than that if you look at it. But like really close moves, and a lot of people kind of front running what they expect to happen in markets because Bitcoin trades 24/7. I mean, obviously I'm pretty known on Twitter for calling that would happen in the short term, and then we'll see a divergence. I'm wondering when it actually happens, and I suspect it might be sooner than people think. So I'm seeing, Bitcoin kind of flat today and Dow way down again. And, I think we'll start to see a string of those days where Bitcoin is up or flat and the market, still goes down. So not to prognosticate at all, but it just seems too obvious, and there's too many people raising their hands, and there's too many people asking about Bitcoin, and they're not asking about Bitcoin because they saw the price drop. They're asking about Bitcoin because we as Bitcoiners, in the world in general has effectively memed Bitcoin into their brain. And they know on the back of their list, somewhere in the back of their mind, they were going to check into Bitcoin. They know that Bitcoin is one of those things they're supposed to be checking into when everything goes to shit. Well, everything's going to shit, and a lot of people are raising their hands. I mean, I don't know about you guys. I know, Brady, you've told me the same thing, and we've heard from a lot of people that, last Friday probably was the most we'd heard from pre-coiners since like December 2017.
Mm-hmm.
And it was literally the day after a 50% drop. And most of them weren't really all that aware of the Bitcoin price drop. They were just freaked out about markets.
Yeah, there's been a lot of incoming inquiry about Bitcoin the past week or so on my end, just anecdotally speaking. I've got a question from Joe Rogers in our Telegram chat room. And if you are listening and you want to ask a question, you can ask on Twitter. Just you can DM Swan Bitcoin. You can find our Telegram group, which is in the Swan Twitter feed, if you want to track that down. This is from Joe Rogers. He wants to ask Parker, one, would you and Nick Bhatia collaborate on an explainer on repo and bonds, but also if you can just give a quick overview on how the repo market works. We've really just kind of been hearing about that. The normies, and including myself, have just really been hearing about the repo market for the first time in the past 6 months or so.
Yeah, so I mean, I think Nick Bhatia could probably write a better primer on this than me. So I'll collaborate with Nick on it, but I'm gonna ask him to take the lead, and I'll give a high level, just so that people understand kind of when the term repo is used, what they're referring to. When say in the funding markets, a bank needs reserves or actual dollars, they would post treasuries as collateral and borrow dollars to fund on a very short-term basis. And as part of that lending agreement, there's essentially a repurchase agreement that would say, okay, I'm going to post my treasuries or other generally good or acceptable collateral, which are generally agency-backed, securities, or the largest piece being treasuries, and such that if I post my treasuries to you, and then you give me dollars, I owe those dollars back at some point in time. And if I don't provide those dollars to you, then you can basically claim the treasuries, sell them in the market, and get your dollars.
Okay.
And oftentimes, kind of in those lending relationships, depending on the type of securities, they, if I need $9, I may have to post $10 worth of treasuries as collateral. And essentially what happened in September was there became a shortage of dollars being lent into those markets. And the repo market is a very large funding market in terms of short-term funding, and such that there were borrowers in demand, and the dollars that had formerly been available to lend into that market, I don't want to say disappeared, but were no longer there. And that caused a massive spike in repo rates, which ultimately induced the Fed to come in and provide dollars directly to that market. So rather than I wouldn't even call it a free market, but rather than there being a truly market mechanism to say, okay, where's the supply and where's the demand? Well, the supply and demand caused rates in the repo market to increase, and don't quote me on specifics, but between 2.5% to 3% on an overnight basis to 10%. Approximately tripling the cost of credit to those markets. So what the Fed did in response was they stepped in to say, okay, we will lend $100 billion to the repo market at X rate. So they basically just became a price setter in the repo market. And then they subsequently had to increase the facilities that they were providing to those markets. I think between September and last Thursday, they had supplied net about 500 billion to the repo market. And then on Thursday of last week, they announced a $1.5 trillion program. I hope that answers just kind of mechanically, kind of on the front end, it's people posting treasuries and receiving cash. But then, under the construct of those that that provide the cash and receive the treasuries could liquidate the treasuries if a borrower failed to pay back, and that the Fed's response to it was to lend directly into that market rather than the market sort out what the interest rate would be. Because if the interest rates were doubling overnight, then those markets would have completely shut down. You're on mute, Brady.
Yeah, that's crazy, man. But that's the way, that's the way this Keynesian fiat age works.
Yeah,
Giacomo, go ahead.
The other thing I was going to point out, just because Corey brought it up in terms of the impact on housing, and I definitely agree with him that people are going to have this kind of fool me once, shame on you, fool me twice, shame on me, and I've written about it in the past, but it's a really like mind-boggling number when you think about it. What the Fed had to do in the last crisis to essentially save the housing market, to in their view save the banking system, they went out and bought 1.7 trillion over the course of years. So they didn't just go in the market tomorrow and buy 1.7 trillion, but they had to buy 1.7 trillion in mortgage-backed securities to stabilize the housing market. And there are only 10 trillion of mortgages total. And I say only, like the fact that trillion is even in our vocabulary is kind of a problem. But essentially the Fed bought they bought 17% of all the supply of mortgage-backed securities. And just in the last week, when they announced their $700 billion QE program, they announced the plans to buy $200 billion worth of mortgages. And ultimately, I think in their view, or what they recognize is, at least based on their worldview of solutions, that in order, if they're going to be effective, they have to keep the housing market propped up. And there likely is no greater market that is more manipulated than housing, based on, at least individually, based on its heavy dependence on credit, but then also what the Fed has done directly to manipulate the supply of credit within that space. And just looking at 200 billion, relative to all Bitcoin that will ever exist, it's $9,500 per Bitcoin. And I can promise you that they're going to need a bigger boat than 200 billion to stabilize the housing market this time around.
Thanks for that, Parker. Giacomo, quick question for you. This is also from Joe Rogers. Knowing from our episode that we did together on Citizen Bitcoin that you were a libertarian activist in Italy for a while, do you see Bitcoin sort of exporting those ideals, the economic ideas of libertarianism particularly, to the rest of the world?
It did. Now it's actually a moment of absolute counter movement because of what I said before. So people scared tend to become irrational and to get into superstitions, and statism is a superstition. And so right now it's not working very well. But historically, yes, I actually stopped doing anything libertarian relating in public in Italy a few years ago, because I started to think that the only solution was more like on an individual plane. So I moved to Switzerland as a resident in Switzerland. I started to just detach from the system. Then I got interested in Bitcoin mostly because it was a tool of individual sovereignty. But then people that was lured into Bitcoin mostly from the financial point of view, so just to make money, or because it was a new cool technology, a lot of those people started actually reading about Austrian economics, about libertarian ethical principles, about stuff that Bitcoin, about cypherpunks ideals, and all the cultural stuff that Bitcoin is based upon. So yes, it did. I think it did work. I think it did work great. I have many a few of the friends I had in the libertarian movement did not understand Bitcoin. There are a few, but really a few. And many people who did got fascinated by Bitcoin first, then they actually switched to libertarian either ideals or analysis framework. So libertarian / Austrian, because you can be ethically a libertarian, but be absolutely ignorant about economics, or you can be very, very knowledgeable of dynamics of praxeology, but not really ethically interested in libertarianism at all. Bitcoin is actually a very good tool that is not just an action tool. It is an action tool, but it's also a learning tool. So he taught to a lot of people what is it all about. Of course, again, I'm sad to see right now a very, very strong counter. A lot of Italian Bitcoiners are just are just starting to appreciate fascism and Chinese Communist Party again. But I think this is a temporary irrationality, mostly driven by fear, and eventually panic. I mean, panic is an evolutionary reaction that we develop for running away from lions in the savannah. It's not something that lasts a lot. After you sit down a bit, the things you keep thinking about, they're not that scary anymore, and so you get back reasoning again.
Oh, I was on mute again. Sorry, guys.
No worries.
Yeah,
Hey, if you want, I'm sorry
Go
to
for it.
non sequitur, but I dug up that chart from Fundstrat from Tom Lee that basically lays out the global store of value. I'm just going to just show how important housing is to that market. Let me see if I can describe it real quick. Where did that go? There we go. Present, and there it is. Share. There. So this doesn't even include currencies, so it's a little bit. There's 30 trillion of narrow money and another 60 if you include broad money. So basically, global store of value is actually more like 370 trillion, which is why when we say if Bitcoin moons and does what we think it can do, the total addressable market is something like 370 trillion. So it's not completely insane to talk about numbers like 20 trillion or 100 trillion or whatever it is. But with the existing market, real estate is such a huge part of it, which is why the Fed, as Parker was saying, is going to do everything that it can to prop up mortgages. And we've got, going back to basically post-World War II, the whole system is just like, save your wealth in your home and we'll make sure that it always goes up or stays stable at least. And it's kind of the underpinning of everything that we do. I was listening to Ansel Lindner's podcast this morning, his most recent one, Bitcoin and Markets. And, he was basically just making the case with some good data and just a lot of experience that, 25% of the US economy is directly related to just building and all of the different services that splinter off of building residential and commercial real estate. And that, really almost everything else, because you're serving the people that make money on that. We've bet the farm, the condo, the house, the office building, the factory. We've bet everything in this country on continuing to build. And that's why the Fed is watching that so closely and will do whatever they possibly can to prop it up.
Parker, question for you. This is from Zender in our Telegram chat. He wants to know how gold fared in the Great Depression, maybe as a analog to how Bitcoin might be seen in a potential recession or depression coming up.
So I haven't closely gone back and studied kind of gold during the Great Depression. I would, I did, go back to the crisis, and I think that my perspective on it would be that during the height of the financial crisis, gold sold off by 25%. Gold, kind of depending on what estimates you use, a $7 trillion to $8 trillion market, and I think as we're seeing today, virtually everything is being sold for dollars. And my explanation for that is that it's the market and all market participants, or not all market participants, but on the margin, an increasing number of participants are figuring out that they're short dollars. So when I look at it and I say, the Fed just increase the supply of dollars, or plans to, by 700 billion, and then you can take that over the amount of Bitcoin, and it's a certain significantly larger dollar value than the price of Bitcoin is today. That can be true at the same time that people are short dollars and that they need dollars. And so my expectation, I think this is consistent with Corey's view, is that in this interim period, while people are all figuring out that they still need dollars, that Bitcoin is a highly liquid asset that is a source or can be a source of dollars, and that because of that, that in this interim market move, while there is kind of panic and people are trying to figure out equilibrium, people are trying to scramble to get the dollars that they didn't know they needed, but that they are starting to figure out that they don't have. It can be the case that the Fed is significantly increasing the supply of dollars when those who are short dollars are continuing to have to scramble to get them on a forced basis. And so kind of my perspective is, and again, I don't predict price levels of Bitcoin, whether short-term or long-term. All I know is that there will likely be continued pressure so long as people have a strain for dollar liquidity. But that on the other side of that tunnel, or kind of on the, once we reach that point, that it will be the single greatest thing that causes people to have to learn about Bitcoin, or for Bitcoin to become intuitive to them, because it is really the function of the Fed, overnight, dictating that they're suddenly going to be $700 billion more dollars, and I think that will ultimately be $4 trillion, if not more, in terms of this program, and that I would expect it to be similar to gold, I guess, in short, during the crisis. There was a 25% drawdown in the price of gold, and then once those people that kind of needed dollars that were in the gold market were tapped out, then gold skyrocketed past where it was at the prior high. And I would expect something similar to Bitcoin, that there are people that are exposed to Bitcoin that need dollars, but that at some point that washes out, and there will be no Bitcoin for sale. And when we see that, there will be a dramatic rise, and that will be a function of kind of the market structure, the market dynamics. But then also, I think of it just as kind of an X and Y axis, and Y axis is time. People are active, it's like knowledge distributes exponentially, and what greater incentive to understand this thing, Bitcoin, that it didn't die. It may have dropped significantly overnight, but that is kind of unobstructed price discovery, and that ultimately creates health for the Bitcoin market, that everyone is maximally accountable, and that we don't have manipulation of price. We actually have a free market. And so I do view that there will be continued turbulence so long as there's a dollar liquidity crisis, which I think is what we're starting to see. But on the tail end of that, then it will be like the phoenix rising from the ashes.
What do you think about this helicopter money proposal? Do you think it can make a difference in the short term for people or for the economy as a whole?
Well, any dollars that they give me, I will buy Bitcoin with first. And I think it's just like late stage, like people giving up all common sense, right? That kind of ascribing a symptom to a problem, but not really understanding the problem itself, and then applying what they appear to be a solution as I think in what my view is actually the problem, that that the problem is debt and credit, and that the only way for the Fed, if they want to start depositing $1,000 into everybody's bank account, the only way for the U.S. government and the Treasury to do that is for the Fed to finance it. So if you are going to create, whether you plan to do a tax cut or to authorize a program via Congress where every American gets $1,000 and Americans get 300 billion, that is one for one going to blow out the federal deficit. And the only way that gets paid for is if, when you see that they're going to do that, you will also see that the Fed has increased the quantitative easing program from 700 billion to $1 trillion or 1.2. It'll be incremental. They'll say, oh, we're going to do another. We're going to expand. Right now, I think they're doing 40 billion a month. They're going to say, oh, we're going to be doing 80 billion a month, and they're not going to tell you when it ends. And I really think of it as, it doesn't solve the problem. It is the problem. So you're just doing more to incentivize what got us here in the first place. And I think that with what's happening in the oil market, what's happening, obviously, like it's significant, and it's something maybe we've never seen in terms of the economic shutdown that's being driven by the coronavirus. But that, what this allows is, it allows like the Fed to almost, they are the arsonists, and they're leaving through the back door in the middle of the night, and then they're coming back around the front as firefighters to say, we're here to save the day. And the, kind of the news around the coronavirus and the news around what's happening in the oil markets provides them the cover to be the firefighter, or to present themselves as the person that's trying to solve the problem. And in my view, all of it is, I think it does a disservice to say that it's a distraction, but it certainly is a disservice to ignore that the problems already existed, and that if it wasn't these things that caused the fire to accelerate, it would have been something else down the road. And that the true underpinning of why the system is so fragile, like it shouldn't be the case that, even if the entire economy needed to shut down for a month or 2 months, it shouldn't cause a depression. It probably will. If it doesn't, it likely will cause a financial crisis, possibly even a depression. And that's only the case because the system is set up in such a fragile structure. And that I think a world of Bitcoin will ultimately, be a world that's more stable, more anti-fragile, and that would be able to deal with something like this in a way that didn't result in, mass unemployment just because everyone, socially distanced for a month or 2 months.
Giacomo, are you back?
Yeah, I'm back, and now the audio is fine.
Okay, great. I've got a question for you from Twitter. How do you think the stability of the European Union versus the United States will play out in the coming years?
I don't think that it's even comparable. I think that it will be very surprising to have the European Union to remain the same after this. Again, I said it before, even without this specific crisis, the Brexit process initiated some kind of irreversible fragmentation process. So everybody was actually predicting the UK becoming like Zambia after Brexit. It didn't happen. They were doing pretty well after this, and I think that due to the fact that apparently Boris Johnson is less crazy than others, they will probably do economically better after this coronavirus crisis. So it will be clear that there is not a strong reason to stay inside. This crisis will just accelerate that when people have time to metabolize it. While in the United States, on the other hand, I would be surprised if any process of secession can actually succeed. I would be pleasantly surprised. I mean, I look nothing. I look forward nothing more than like to move in an independent Texas or New Hampshire, but without federal agents being able to come in. But that sounds a little bit politically unrealistic yet. So I will. If we talk about dreams, then yes, every nation state will actually just disintegrate into micro city states like Hong Kong after this. If we want to be realistic, European Union is probably over, while the United States are probably going to resist until we move to some really unforecastable and unimaginable scenarios.
Let's lighten this up a little bit. What are some really positive things that may come out of this whole coronavirus thing in particular? And I'm thinking about things like a lot of us realizing that we can get work done remotely, and therefore people just escaping from desk slavery and cubicle hell, because it's just so obvious that things can be done a different way. So that's one thing I think may take hold. You've got a lot of people like our friend Daniel Prince, who's done like the world schooling, homeschooling thing. A lot of parents are experiencing, my wife and daughter right now are on Zoom, in my daughter's room, just doing their hour in the morning kickoff with their class, and they just kind of like see everybody and say hi, and then get some work to do for the rest of the day. You know, so maybe schools get affected. Maybe this is the thing. Our buddy Udi, obviously going nuts with Bitcoin VR and all these meetups. Maybe this is the thing that really makes everybody really take a second look at VR, which wasn't quite ready 5 or 6 years ago. But the fact that there are headsets now that you can be untethered and don't get too hot on your face, and you can wear them for an hour or two and not really bother, it doesn't bother you that much. Brady, I know you and I just ordered our Oculus Quests, and I'm going to start messing around and stuff. So like those three things, I think, you know, may be huge positives for society. What else are you guys looking at that might be silver linings in this whole situation?
So yeah, I would like to add to this. In a way, I fully agree, because if you look at some parts of this crisis, it looks like the cypherpunk dream made reality. Basically, everybody's interacted only online, and when they do interact offline, they will be wearing masks because so unrecognizable. So it's a cypherpunk paradise. One of the I agree, especially for schooling. I mean, I think that mass schooling was. Both seriously unhealthy for the physical health, because of I mean, it's not just coronavirus. Every kid in the world is basically bringing home any kind of disease from these massive forced petri dishes that are modern state schooling. So a lack of a collapse of trust in school, in mass schooling, state-driven mass schooling, is very good. And for work, that's true as well. A lot of people just spending entire lives inside the gray office without understanding the point of mobility, interaction, and the internet itself. So I think that if on one side there is more statist fanatism going on the other side there is a lot of thinking about the fact that we can do things differently, especially about working and schooling. Another positive effect is that everything we can do now online is only due to the fact that everything else may be collapsing. I mean, the stock market is collapsing, our freedom is collapsing, our ability to get food is collapsing, but the internet is surprisingly fine. But that's not necessarily something that we can take for granted. So I think that many people will think, okay, now that we know that everything we gave for granted can actually be taken away, what about the internet? Are we really sure? I mean, we were scared about the internet being censored 1 year ago, but now, if even that can get censored, then now it's really a tragedy. So people can become more aware that we really need to find ways to protect the internet, to decentralize the internet a bit, to make the internet resilient to crisis, which is fundamental, because right now everything we need is just a few like DNS provider shutting everybody down, and we are completely insulated from the world. So it's really important to be concerned about the health of the internet. And in general, there is a healthy distrust. I mean, there should be. There is not yet, because people are scared, but there will be irreversible damage to the reputation of experts and academic gurus. Like those people, like the government appointed experts, they started to tell people like OMS. Those clowns spent 2 months saying people that it was just a flu, and everybody spreading panic was actually a troll that needed to be censored from going to supporting full fascist measures. And in between, they just told everybody to not use masks, because magically, from a droplet transmitted disease, masks are useless. So the level of obvious idiocy coming from I say the OMS because it's Italian, from WHO and from similar clown circles, I think it's becoming quite obvious, and people is realizing that they don't know what to believe, but they're starting to understand what not to believe, which is already a good step.
I'm seeing that at the micro level too. Obviously, we had something going down in the US, which was ludicrous, which was mask related, which was all of the media and the government saying, you don't need a masks because it's not going to protect you, but we also need them for our healthcare workers. And it's like literally the same sentence, the same headline, and it just caused all this cognitive dissonance for people. So that was ridiculous. Obviously, you know, a virus doesn't float around by itself, so it doesn't matter if the virus can get through the mask. It's usually in a droplet, and even a bandana is going to stop that droplet from getting in your mouth. So really stupid and patently false. The other thing, kind of on the micro level, and I don't know if this is good or bad for society, but people are realizing that their friends and people in their social circles that they thought were expert on different things don't know what the hell they're talking about. I don't know how many friends I've had that have said, like, you know, what do you know? You're not a doctor. My doctor friend says blank. And like, obviously, I don't know if it's Bitcoiners' love for macro, Taleb, you know, just kind of like generally seeking truth, or just being plugged into the hive mind of Twitter all day, every day. But, you know, most Bitcoiners, you know, obviously had this right from, you know, late January, or at least by early February. And so it's starting to be, there's a way that people are learning to find truth, and it's based on the signaling that we get from, you know, really smart people being good at judging. And this is, again, a very sort of like, you know, Talebian, but also kind of a Rumsfeldian approach, which is like, know what you know, but also know what you don't know, and be able to figure out and be able to judge when someone you're talking to or listening to or reading probably does know. And that's what I think it's a skill a lot of people are developing. And I think people in the macro investing world have always been pretty good at it. And I think Bitcoiners are getting really, really, really good at it, because you're skin in the game, owning Bitcoin and having to find truth and develop a sense for what is true that is counter to what you are being told at all times by experts in the mainstream media and all of your friends, is basically creating this force of humans that have a way of learning and a way of discovering truth, and insisting that there is a truth and that it's not all, you know, relative. That's probably like the best training ground you can have for this situation.
What about you, Parker? Any silver linings?
Bitcoin, always Bitcoin. I think that this is ultimately going to cause people an accelerated basis to have to question, you know, kind of very core assumptions. So that, and I view it as, every time there's an announcement about a $1.5 trillion repo program or a $700 billion QE program, whether it's the Fed, the ECB, however they want to term it, that increasingly on an accelerated basis, central banks are going to have to do that. And each time that they do, it's going to cause people to wake up about their money, and to get more and more people interested in learning, like, why this thing Bitcoin exists, why it hasn't died, and that the net result of that will be a much more stable, a much more resilient world. And like, one of the things that I find almost baffling is how many people, when this stuff happens, like, there's like an instant reaction to look to the government to do something. You know, it's like we've become conditioned to rely on government to fix a problem, or that there's some expectation that like government should fight disease. And it's like, you know, I've seen stories about how, you know, there were universities that, you know, wanted to, you know, work on their own testing kits, or, you know, their own vaccines or viruses, and like they were told to defer to the CDC. And it's like, wait, what? You know, why is that? You know, why can't, you know, on a decentralized basis, people figure it out? And so I think that, you know, kind of on the economic side, it will force people to, on an accelerated basis, to learn about Bitcoin. And then I think just in terms of a response mechanism, it's going to train people that, like, the government, at least as it is intended or was intended, is not supposed to fix all your problems. It's, you know, generally supposed to do as few things as possible. And that has been a trend that has not gone our way. And I think that kind of responses, you know, again, whether it be on the monetary side or the fiscal side, to what happens here, will cause people to realize that, no, like, we are resilient, we can figure things out, and that we'll actually come up with better solutions if it's a market of, you know, whether it's the United States, 325 million people, trying to all solve that, rather than a few people kind of in windowless rooms trying to come up with, singular solutions for everybody.
Yeah, that's one that's big for me, is just, reminding us that communities can work, that local is good. Just an example, like in our neighborhood, there's already lots of planning going on through Facebook groups and other, similar online groups for community gardens. And people, we live in a town of about 100,000 people. It's a college town, but the neighborhood we live in is actually like sort of we have a bunch of big yards and stuff. It's right across the river from downtown, but it's an interesting neighborhood. It's like urban but also a little rural feel to it. So people are coming together to like plan on growing food and bringing in some like chickens and livestock to co-raise together to provide protein. It's interesting. And for instance, yesterday, this is just another little anecdote. Everybody's for St. Patrick's Day looks forward to hanging out and partying, and there's a big parade usually in this town. And all of that stuff was canceled. We're all self-quarantined. So everyone came with the idea that we're going to put shamrocks in the windows, like homemade shamrocks in the windows. And over 150 homes in this neighborhood participated. And people were out on walks, on their own, still practicing social distancing, but able to kind of feel some connection with our neighbors. So I think that that's going to be a big silver lining for coming out of this, for sure. That, and just like you said, Parker, the fact that Bitcoin's going to move, I think, in people's minds away from this, speculative asset to a serious alternative to what we're seeing play out in the fiat regime. So, all right, guys, we're at about time that we had scheduled, and I want to be mindful of your guys' time. I really appreciate you joining us, Parker and Giacomo. I think it was a great conversation, and I think it's really important now more than ever for Bitcoiners to be out there and talking and kind of carrying this light forward and bringing the community together to kind of do that collectively. So thanks, guys. Appreciate it.
Yeah, thanks
Thank
for
you.
having us.
Thanks.
Bye.
Bye.
See you guys.